There's also still questions about, just how much Chinese manufacturers will be able to sustain this blow.
We've been in hybrids for over 20 years. We're number 3 in the U.S. in hybrids right now.
I have to say that GM and Ford were 2 of the biggest disappointments in the overall auto space.
This Tesla phenomenon that has dominated the automobile industry for so long is going to be in the rearview mirror in the not too distant future.
For Ford, GM, and if you're a short seller, you want this bill to pass.
All that and more. So let's get to it. Tesla stock is down in the pre-market yet again, sitting at $169.91. I know I took an opportunity to buy a couple of shares at $169. Did you?
And European governments are definitely divided. So what's the latest from the auto sector? What do they want?
Yeah, I mean, there's a lot of potential for this to go sideways. That being said, there's also still questions about, just how much Chinese manufacturers will be able to sustain this blow, to what extent they've been pricing their vehicles sort of strategically to try to avoid this level of scrutiny and maybe have a cushion to work with to bring the starting prices down and still be able to sell competitively, even with something like a 25% additional tariff. So there are a lot of question marks here and a lot of moving pieces, but the likelihood or possibility of retaliation for China means that it's kind of a negative story all around, right? It's a blow to the Chinese companies, but also something that, as you mentioned, the Germans are quite worried about.
So does China retaliate? Does China, do they care about the amount that the tariffs are set at, or is it just an affront by just putting something on them?
You're damn right they're gonna retaliate. But this is what you're going to have to do if you want your legacy auto manufacturers to survive. Tesla's already eating their lunch on the 3 pillars that are going to be needed to supplant the ICE vehicle: performance, functionality, and style. Now entering the market, you have these exotic EVs from China waving that 4th pillar of price around. You really have no choice but to slap tariffs on these Chinese EV makers. Now, I don't expect the German automakers to just lie down and die like our legacy auto manufacturers over here. Just give them a chance to compete on price for now, and hopefully these giants of the automobile industry can figure out a way to make these things more affordable, manufacture them with greater efficiency, and maybe, just maybe, figure out how to make them more desirable than their internal combustion engine variant.
I don't think that Beijing wants to overdo it here in terms of retaliation, but we've already seen them, allude to this possibility of maybe that they would retaliate with tariffs on cars with large engines, which would hit German manufacturers that still ship a fair number of cars from Germany into China.
Craig, very quickly, BNEF used to think that EVs were good for the climate. Now there's question marks.
It's really a compelling report today, about 260 pages worth of analysis on the state of the EV market, how much EVs are slowing down, plug-in hybrids sort of picking up some of the slack, and some questions about just how good those are for the climate. But it's absolutely the case that the industry needs to accelerate in order to get us to net zero. And right now, the momentum has really stalled.
Tesla's not going to be able to do it by themselves. And by the looks of it, no government is going to allow Chinese auto manufacturers to play in their backyard without a significant handicap. Either way, these projections are way too low, and then they revise them even lower. Tesla and BYD alone are going to smash these numbers. I can't wait to see the look of awe from the talking heads in the media when Tesla alone breaks all of these expectations.
Ford reporting sales growth of over 11% in the month of May, driven by a nearly 65% boost in hybrid sales from a year ago. But with overall electric vehicle sales raising concerns about a possible slowdown, what does this mean for the auto giants moving forward? Yahoo Finance's Pras Subramanian is standing by live in living color at Deutsche Bank's Global Auto Industry Conference with Ford Vice Chair John Lawler for more. Hey, Pras.
Give us some updates on what you're going to be talking about here. What are some of the new projections potentially for Ford right now going into 2024?
Well, we had a good start to the year with Q1, and we'll be talking about where we're headed with the business. You know, Ford Plus strategy is really about focusing in our customers and their needs. And you start to see that really come through in the segmentation we did, in that Ford Pro customers are distinct from Ford Blue customers, which are distinct from our electric vehicle customers, and how we're progressing our strategies in each of those spaces, how we're providing them value, choice, and we're moving the business forward.
You know, you guys had May sales recently, very strong month. Both, not just traditional ICE vehicles, but also hybrid and EV. Let's talk about hybrids. Did you guys envision that? You know, a year ago, we were talking to you guys at the Delivering Ford Plus conference. EVs are the big push, but look at hybrid sales. How do you explain that?
Yeah, so when you think about hybrids with Ford, we've been in hybrids for over 20 years. We're number 3 in the US in hybrids right now. Now, our hybrid sales grew 40%. They're going to grow 40% this year. You can't just turn that on with a switch. So all the narrative and hype had been around EVs, but we never walked away from hybrids. We always had those in their cycle plan. They were always funded. And you're seeing that now as the demand's increased. We have the capacity to provide for consumers, and you're seeing that take place. So we're really pleased about our choice that we have for customers across gas, hybrid, as well as electric vehicles.
The stepping stone to the battery electric vehicle. I too bought a hybrid. Wasn't a Ford, but I bought a hybrid. My next vehicle was the Tesla Model 3, and I haven't looked back since. But maybe I'm an outlier. Maybe there's going to be individuals that just stick with the hybrid and don't graduate to the battery electric vehicle that's the best thing on 4 wheels.
Taking a look at GM, big news, buybacks, dividends, and more. Let's hear a little bit about this.
Yeah, and I think definitely a good vote of confidence, Nicole, that GM is in a fairly healthy position as a company, frankly. So we did see the board has authorized now this repurchase of up to $6 billion worth of shares in a new program that it builds on to appease its shareholders. They said that overall, the board did first kick off this last November by approving a $10 billion accelerated share buyback, while still having around $1.4 billion of capacity from its previous program. Now announcing just this morning that it purchased around $300 million in shares during the first quarter, and it expects to exhaust the remaining $1.1 billion capacity of its prior program before the second quarter ends. It's now also looking to continue to boost this shareholder support as it does make some pretty big swings to obviously a more autonomous electric vehicle model. But it's risen substantially actually since the start of this year. I have to say that GM and Ford were two of the biggest disappointments in the overall auto space. I mean, they are pretty much the auto space, admittedly, but
it would appear GM is more worried about their stock price and appeasing shareholders than innovating in the space that is changing quite rapidly. Don't get me wrong, the financials are important, but not nearly as important as moving with the times.
Joining us live from Deutsche Bank's Global Auto Industry Conference in New York City, we have the man himself, General Motors Chief Financial Officer, Paul Jacobson.
We're continuing to lean into our capital allocation policy, and as the business has continued to perform and we've seen stable pricing, we've seen disciplined incentives from our team, and we've seen a vehicle portfolio that is customers just love. And all that spells a lot of success. So we're able to invest in the business, we're able to maintain a strong balance sheet, and we're able to return cash to shareholders. So we've completed that prior buyback authorization that we had done, and pleased to announce that the board has just authorized another $6 billion in share repurchases that will commence beginning in the second half of 2024.
Yeah, and you guys also boosted the dividend at the end of last year.
Yeah.
So a lot of big news from a capital sort of return point of view. I think investors here at this Deutsche Bank conference happy to see that. But talking about the business too, what's sort of the evolution they're going on right now as 2024 kind of the halfway point here? EV sales ramping up, ICE sales still strong. What's going on with the mix there exactly?
So, you know, we've actually seen EV growth moderate a little bit this year for the industry, but GM's EV growth is outpacing everybody. We're picking up significant share. We sold over 9,500 EVs in North America last month. So seeing really strong gains in the Lyriq, in the Blazer. Really excited about the game-changing Equinox EV, which will be the lowest price 300-mile range vehicle on the market in the EV space. And that's just starting to now get momentum as we see going forward. So we're starting to execute really, really well in the EV space and seeing that ramp up. And the ICE portfolio with the new Traverse, the new Equinox. Those vehicles, not only are customers really flocking to them, but they're also more profitable than the older models that they've replaced as well. So the business is really performing well.
Sounds good. This will be one of the many clips that I play should the legacy auto manufacturers fail to make the transition properly, and the discussion of bailouts start crossing the airwaves. Stock buybacks, dividends, not focusing on the innovation that's necessary to survive. Hey, you know best. Just don't be asking for no bailout later.
Just mentioned this, the board just approved a $6 billion share buyback. The stock is rising today to a 52-week high. You like it?
I do, Kelly. And you guys usually give me a hard time for being negative on stocks, but I'm going to give you 2 buys in a row. General Motors has been one of our favorite stocks for a long time. We think it's been unduly punished because of the whole EV fad and craze.
Fad? Craze?
That's starting to unwind now. We're seeing EV sales slow dramatically, and we're shifting more toward hybrids.
It is? Oh man, maybe I should stop buying Teslas. Tesla's gonna go out of business. This is simply just a fad or a craze?
And at the end of the day, we think that sort of this Tesla phenomenon that has dominated the automobile industry for so long is going to be in the rearview mirror in the not too distant future.
You think? Maybe somebody should, somebody should tell him that Tesla's just getting started. It's almost like he doesn't know that the Tesla Model Y was the best-selling vehicle in 2023. It sounds like he feels that this hyper-convoluted powertrain of EVs and ICE is going to be the future of the automobile industry. It won't take people long to realize there's a more simple, efficient way to go about this transition. And eventually, they're going to find themselves inside the best thing on 4 wheels.
Obviously negative on Tesla, but that means we can be positive on the incumbents who've got distribution and other long-term competitive advantages that Tesla has really proven now they can't overcome.
Would you care to elaborate? The future of the automobile industry is electric, and it is autonomous. No one does autonomy like Tesla does. No one does battery electric vehicles like Tesla does. And oh yeah, they're the only ones with positive automotive gross margins regarding EVs. What the fuck are you talking about?
And so we feel like GE will be just fine when it comes to EVs. They can make them too. They can sell high-priced EVs, but they can sell low-priced EVs better than I think Tesla. And so I think long-term, we think GM is a great play.
Talk to me when GM reaches profitability on their EVs.
General Motors actually cut their full-year outlook for EV production. They took it down slightly from 200 to 300,000 to 200 to 250,000.
Still seems a little bit high for GM. Expect that number to dwindle over the next few months.
And GM's CFO noted that while overall demand is fine, the industry is just not taking off like many expected. I mean, who could have seen that coming? It's stuck at about 8% of cars and trucks sold. But as we have said on this show many times, maybe people don't want electric cars. They want Teslas. It's a different thing. If you've driven both, you know what I'm talking about.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother. Right. I can't begin to tell you that if you're in an EV that's not a Tesla, that is simply a lateral move from that internal combustion engine, while being in a Tesla is like being in the future. No clutter, everything streamlined. You get the best of the performance. You feel it when you smash the accelerator, and the vehicle just simply intuits your needs. It's not like buying a car that just has a different logo on it. Nah, it's not like that. When you opt not to go with a Tesla, you're opting for a less performative vehicle. You're opting for something that is an inferior product.
And so if Musk were to leave, and that's a huge, huge if, probably unlikely, would Detroit be the ultimate winner or maybe ultimate loser? Let's take that to your leadoff panel tonight. With us, former Ford CEO and CNBC contributor Mark Fields and GLJ Research founder and CEO Gordon Johnson. Mark, listen, I don't think there's any way that Musk would ever leave Tesla. It's his baby, but he's got a lot of things going on, and this could be a big slight if it doesn't go through. What do you make of the vote? What do you make of Musk's future at Tesla either way?
Well, listen, I strongly believe that this is gonna pass. It's gonna pass with a pretty good margin. But listen, at the end of the day, a lot of the shareholders, particularly the ones that have not bought in the last year, the ones that have been there for quite some time, they've made a lot of money. And a lot of them are thinking, hey, he made this fair and square, so I think it's going to pass.
Pay that man his money.
If it doesn't, I mean, that's the big question. You know, would Musk just put less focus on Tesla? Or in an extreme, would he just say, I'm exiting the business, I'm going to focus on other things? And oh, by the way, I'm going to take the AI efforts and the robotic efforts at Tesla with me.
The odds of that scenario playing out isn't 0%. I just think it's highly unlikely. Besides much of his wealth being tied up into Tesla, there are two missions that are of vital importance to Elon Musk. You could call them 1A and 1B. 1A is making the human race multiplanetary. That's where SpaceX comes in. 1B is transitioning the Earth to a sustainable energy economy. That's where Tesla comes in. If it's not about the money for Elon Musk, what the do you think it's about? It's about these missions.
Gordon, your hot take is exactly the opposite of the premise that I just laid out, I think, which is that maybe the best thing for Detroit would be for Musk to stay.
Listen, Musk has long ago mentally checked out of Tesla, but he's not going to leave, no matter if this vote passes or not. What he's going to do is what he's done for years. He's going to continue to use Tesla to milk money out of to support his other businesses. Let me give you some examples. Let me look at my notes. CNBC reported that Tesla brought millions of dollars worth of NVIDIA chips that they sent to XAI. Yahoo reported that the Boring Company is now tunneling under Tesla's Gigafactory, which Tesla is paying them for. You know, Tesla's acquisition of Solar City, where they use fake solar panels to sell Tesla investors on using Tesla shares to bail out Elon Musk's cousin. You know, allegations that Tesla is using, Elon Musk is using money to build houses. The point is, he uses Tesla as a piggy bank.
Oh, I love me some Gordon Johnson. Nothing like a good conspiracy to wake you up in the morning. But I do agree with Gordon Johnson in that one respect that Elon ain't going nowhere. But I believe that's all I can agree with in that tirade.
So whether his compensation package passes or not, he's going to stay at Tesla. He just wants to get this money. So I don't think there's a big change. However, for Ford, GM, and if you're a short seller, you want this deal to pass. The reason why you want it to pass is because Musk is a part-time CEO. He's not going to work any harder. You want him there because he's focused on other ventures. You want somebody who's not focused on the auto business, and he's not, because Tesla is a low margin, very low margin now car company that's not growing. Musk likes to focus on growth companies. So his focus is going to be elsewhere. So
come on, Gordon. I mean, it is Tesla. They've got a lot of money, but it's not infinite. The car side may not have exponential growth like it once did. But are you choosing to ignore FSD, Optimus, the energy side of their business, all of which have the potential of massive growth?
Mark, when you were at Ford, how much did you guys look at Tesla, look at Musk, look at what he was doing? I'm not going to say invented the industry, because electric cars have been around for longer than gas cars, if we're just being intellectually honest. But how much did you guys look at what they had done and say, well, we like this, we don't like that? I mean, how relevant is he to the entire industry?
Well, initially, we didn't look very hard, right? Because, you know, it was kind of the innovator's dilemma. But as Tesla was succeeding, we started to benchmark them, you know, very, very heavily. And now the industry today, the established industry, benchmarks Tesla a lot, particularly around not only just software and battery development, but also manufacturing techniques.
What? This is a former Ford CEO. Kind of dismissed Tesla in the beginning. Oh yeah, cool, bro. But then they started to grow. They started to succeed. They started to make money. Emphasis on innovation, battery technology, the manufacturing process. Something to be admired. Toyota called the Model Y production a work of art. Where does that fit in your short seller thesis, Gordon? In conclusion, no matter where you are in the world, you won't be able to keep the Chinese auto manufacturers from your shores for very much longer. Tariff or no tariff. US legacy auto manufacturers are focusing on other things instead of innovating the EV space. Hybrids, our financials. I mean, Don't you think you should spend that money on actually catching up in the battery electric vehicle space? The autonomous space? Don't get me wrong, there's going to be plenty of money to be made on the internal combustion engine and the hybrid vehicle, but it will not sustain you into the future, as long as you know that and transition to what will. Otherwise, be content with your eventual bankruptcy. Don't ask for bailout. And we're less than 2 days away from the pivotal vote of Elon Musk's pay package and many other topics. While I'm not concerned about Elon abandoning Tesla's mission, I believe the man should be paid for his time, and the next time this type of case is brought up to any court, it is dismissed. And we got a good dose of some Gordon Johnson conspiracy theories. A little short seller's delight, if you will. Tesla is just Elon Musk's piggy bank. Whatever you say, Gordon. Whatever you say. That's all I got for you today. Be easy. Brrr.